This TFMR podcast is brought to you by Cyber Metals, a new digital precious metal platform from your friends at JM Bullion. Visit cybermetals.com for more details. Welcome back to your TF Metals Report podcast highlights for the week of Monday, April 18th, 2022, a week that began with promise, and the highs of the week, as it turns out, were early Monday morning. We knew it was going to be a tough week, mainly because the COMEX calendar, but man, by the time the Fed goons got done flapping their gums talking about 75 basis point rate hikes at the FOMC in May, man, everything came under pressure, particularly late in the week. Now, early in the week, we were still optimistic for a rebound. The previous 3 or 4 weeks had been shown strong rebounds into the latter part of the week. We were hoping for another one of those. Of course, it didn't turn out that way. But on Monday, there was still hope, and that was one of the things we discussed. Again, Monday, April the 18th. And finally, here's your GDX. This is just so classic, right? Same thing, 3 Mondays, or actually 3 Friday, Monday combos in a row. Okay, go back to the 1st of April, Friday the 1st. Big green candle gets everybody excited. All I read on Twitter all weekend is how great the shares, and man, we're ready to roll. Everybody got sucked in. Massive volume in the GDX and everything else in the first 10 minutes, 15 minutes of New York Stock Exchange trading on Monday the 4th. And then they dropped the bottom out of silver. Remember that? And the shares followed it down, bottoming out almost 2 points down on Wednesday, and then rallying into Friday. Everybody's all excited again over the weekend. You get this big pop up north of 40 at the open, and then but you close all the way back down here at 39.50. Tuesday, not so good. Rallying Wednesday and Thursday. Into the weekend, everybody's so bullish and excited and optimistic, and they open the price higher at 41 or 40.50 or 41.50, something like that. I don't know, whatever that is. 41.50, I guess. Almost got to 42. And then close it all the way back down under 41. I mean, it's just the same pattern. Does it make me discouraged? Does it make me nervous? No, none of that stuff. I mean, I think it looks great. For the same reason everybody was excited on April the 1st. You should be excited now. Yeah, okay, price is only $1.50 higher 2.5 weeks later, but $1.50 on 39.50 is what, 4%? 4% in 2.5 weeks? Okay. I'll sign me up for that. I'll take 4.5% over the next 2.5 weeks too. Tuesday the 19th brought us a glimpse of what was to come, unfortunately. Major smash in COMEX digital gold beginning shortly after, like immediately after the COMEX open. And then after price found support at 1960, which made sense, another major smash to take that support out and turn it into resistance, a level that would serve as resistance through the rest of the week. So we got 2 charts for you here for the day, Tuesday, April the 19th, your intraday chart of COMEX gold and COMEX silver. You can see the manipulative effort in gold to try to break that 1960 level, and all part of what we discussed, again, Tuesday the 19th. As soon as the COMEX opened, 7:20 Eastern, that red candle I'm pointing to, see that's pointing right at the open. Immediately in these 2-minute candlesticks, here comes the selling pressure. Look at the surge of red volume bars. Smashing price down, and then look where it bounced. 1960. Who talks about 1960 all the time? Who talks about those $40, ladders from all the way back down? 1680, 1720, 1760, 1800, 1840, 1880, 1920. You know how important 1920 is. 1960. Resistance. Remember back in November of 2020 and then January 2021. And now all of a sudden, support today for about 2 hours. And then, here's your scam. The biggest massive surge of volume all day long. 5,500 contracts in 1 2-minute period to blast 1960 and drop it down to 1954. And now that turns 1960 into resistance, which you can see going into the COMEX close. And then once you get the COMEX close, keep the machines on, and we can drop price all the way down to 1945 with another volume spike on the Globex. What an absolute scam. Now, look, here's the thing. Compare that chart to silver. Again, and you can see how these are not linked at the hip. Oh, sure, silver smashed as well. but it was just generally plunges like, I don't know, legging out of spread trades. One after the other, red candle, all of them spaced a few minutes apart, finally washing price out. But again, not like gold. It didn't just smash and then go sideways for an hour and a half and then get plummeted to break 1960. No, it just went down all day long. How about that? It doesn't really look much like, kind of the pressure finally eased by about 11 in the morning. And then, of course, rolled over on the Globex because of that. But look at the action between the COMEX Open and 10 o'clock. Look how different it is. Again, two different bits of manipulation and smashing going on here. And it's a big, massive con. That's what it is. As we always remind you, if you're going to follow the precious metals, you got to follow just about everything. Price is not just simply a dot on a screen. It's impacted by all sorts of world events and all sorts of other commodities. So as part of what we discussed on Wednesday the 20th, we looked at corn, copper, the relationship between those two, if there is one, and then how that might extend back to the precious metals. Have a listen to this. What's laid on here with corn is copper. Now, again, there's really no reason to see a correlation here other than the fact that they're both popular commodities. But copper in a blue line and corn in the candlesticks, you can see them generally trending together, particularly since the war started. And notice how corn broke out above 780 and then 760 or whatever it was, and went to 8. I guess on here it looks like 740. But anyway, look at copper, as you know, has yet to get above 480 and go back to 5 and beyond. And look at the relative gap between the two that has opened. So I guess what I'm saying is, let's put all this, connect all these dots to 4 levels. If corn looks like it wants to go higher the rest of this week, and today's higher close than Monday certainly makes it look that way, well, then maybe copper will move as well and bounce off its 50-day like it has 4 times in the past. And if copper's moving, well, then silver's probably going to move too and may move back up toward 26. And if silver's moving, then you know that GDX is moving. So there, I just connected for you. If corn goes up, then the mining shares are going to go up. You like that? I must have mush in my brain. As a further extension of that, we've got to watch the stock market too. You don't want to get into a case of global margin calls, like when the stock market really pukes. And the stock market was falling again. It went down sharply on Thursday, along with the mining shares and the metals, and fell to a spot that looked like it needed to hold as very important support, near 4,400 on the S&P. Falling below there would open the trap door maybe to 4,300. And that's exactly what happened on Friday. But that's all part of what we talked about on Thursday, April 21st. So here's that chart of the S&P I was telling you about. Does this not look like tomorrow's a big day? Here it is right back to 4,400. That's a level that now, 7 out of the last 8 trading days, we found support or whatever you want to call it there. Yeah. But notice the moving average eye, okay? They're bearishly configured. The 100-day is sloping downward, about to cross through the 200-day. If this trend lower continues, then they're going to be perfectly bearishly configured, which, again, should not surprise anyone. But look what happened today. Just today only. One, that's an engulfing, double, triple engulfing candle of yesterday. But look at the highs of today at the open, pretty much right at the 100-day. Actually getting above the 200-day as well, but then falling all day and then closing again below the 50-day. Now, in the last 2 weeks, notice we've closed below the 50-day and right at this 4,400 3 previous times in the last 8 days. And each time that 4,400 is held, and we've been able to get back above, the stunk market has been able to get back above that 50-day. Well, I don't know about tomorrow. If it starts breaking down, it could fall 100 points. 4,300 would be the next level to watch. 100 points down in the S&P after down 66 today. Put a pretty ugly candle on the weekly chart. We'll see. I think that'll be the most interesting thing to watch tomorrow. Well, we finally reached Friday, April 22nd, and it's time to wrap up what was really a lousy week. It started with promise, with the highs of the week in the precious metals coming early Monday morning. But we knew the COMEX calendar was working against us, And as it turned out, it was a lousy week across the board, not just for the precious metals and the miners, the energy sector, almost all sectors on the New York Stock Exchange, the S&P going out at multi-week lows, the bond market's in the tank, really nothing working at all this week. The mining shares had a particularly tough week. It really wasn't that bad until Thursday, when all miners, not just precious metal miners, but base metals, uranium, everything just got drilled. And on the back of Newmont's lousy earnings Friday morning, they got drilled again on Friday, painting a really ugly reversal candle on the chart. So there's probably more weakness to come, but there should be some support near the 200-day moving average, which is also basically the 50-day moving average you see on this final chart of the week, which is the weekly chart of the GDX. Oh, maybe 35, 36. I'll remind you, we've had a hell of a rally from 29 to 41 in just about 7 weeks' time. So we were due for a pullback. Fundamentally, the story remains strong, and fundamentally, so does TFMR. So join us there. Now is the time to be wired in and paying attention. The subscription is just $15 a month, and we'd love to have you. Go to tfmetals.report.com/subscribe to check it all out. And then come back next week for another one of these podcast summaries. It would be another interesting week, no doubt about that, as we get ready for the first week of May, the week that will follow with the next FOMC meeting and all the other fun that'll go with it. But we'll worry about that then. For now, have a great weekend, and thanks for listening to the TF Metals Report podcast highlights.